Hey traders, this is Blake Morrow with Trader Summit, and with me today I have Alex Cole from Go and No-Go Trend Charts. How are you, Alex? Good to meet you, or talk to you, actually.
Yeah, nice to be on here. Thanks for having me. It's good to chat again.
Yeah, it is good to chat again. I know you and I have chatted separately, not on a interview type of format, but it's nice to see you again. And I'm really excited about people learning about what you guys do. I've been running the Go and No-Go Trend on my TradingView charts for, I want to say, over a year now, and I pop them on every once in a while to get a view of what you guys are seeing, and I think it's really cool. And so I'm excited to introduce it to the trading community more, especially the Traders Summit community. But before I do that, I think people probably want to know a little bit about you. So tell us a little bit about yourself and how you came to develop Go and No-Go Trend.
Absolutely. So I worked in institutional finance for a long time, mostly at Bloomberg for the best part of 15 years. And I was a technical analyst at Bloomberg, and that was my area of specialty. So I would need to go to clients, whether they were oil traders or, mutual fund or bond guys or rates traders. And so for me, it became very important to be able to get a quick overview of any security from a technical perspective so that I could go out and have competent conversations with anybody, no matter where they were in the industry. And so that led me down to a process of trying to refine my charts to make them easy to understand. And what I found was, just like probably so many people that trade or technicians out there, that you end up with a really good disciplined checklist of what you want to look for, but you end up complicating your charts by putting study after study after study and line on line and line on your charts, to the point that maybe price becomes really hard to see. You can't see key levels, and you end up with analysis paralysis, and it's just really, really difficult. Whether you're new to technicals, that's a problem, or even if you're a very seasoned professional, being able to explain your process to, let's say, the buy side, if you're in sell side research, becomes really, really complicated. So from all angles, I've sort of just focused on trying to refine charts and make them simple, and that led me to trying to develop the Go-No-Go charts.
Well, it's a really cool, and I know you've worked institutionally with, you trained people on Bloomberg for many years. Is that correct?
Yeah, that's right.
Yeah, I mean, trying to get people over the hump with learning technical analysis is always challenging. And I myself, I draw so many trend lines and Fibonacci's and oscillators that it does kind of convolute the chart a little bit. And you're right, it makes it more difficult to make those decisions. So, well, I'm excited for everybody to see the Go and No-Go Trend. So why don't you tell us a little bit about how it works and how to view it? I've got it on my chart right now, but I'd love to see what you're looking at.
Yeah, let me pull it up for you. So I'm going to share my screen here. Let me know when you can see this.
I can.
Awesome. So, if we just look at something as currently being talked about as the S&P, what you can see here is that the main chart is a color-coded chart. And what we've done is taken some of the most used, most statistically tested concepts and measurements in technical analysis and blended them into something that color codes the chart based on strength of trend. So what you'll see is, as the market trends higher, you get the blue colors. The strongest trending Go color is the bright blue. The weaker color is the aqua, showing that there's weakness. When you get into a no-go or a bearish trend, we have pinks and purples. The pink being the weaker, which you'll often see on a counter trend rally like this, and then the stronger purple in the strongest part of the downtrend or the no-go trend. If you see a few amber bars in here, we call those the go fish bars, and those are our sort of non-directional. That comes from we used to both love reading about Jesse Livermore, and he used to say there's a time to go long, time to go short, time to go fishing. So those amber bars are our go fish bars, and you often see them in transition periods between trends. So that's sort of the gist of the idea behind the Go-No-Go trend. But then what we wanted to do was put a complete technical picture together for anybody looking at charts in a way that's as simple as possible. And so that, of course, then leads to the study of momentum and volume and volatility. And so I tried to put everything that ended up being my process into one chart that was just one price panel and one oscillator panel. So you can see down below, the oscillator is a similar idea in that we are blending the most used, think of things like RSI, stochastics, those kinds of things into one oscillator that gives us a clear view of momentum in only one panel. We also put volume within the oscillator, and you can see that when the volume, when the oscillator changes color, that's when we know volume has changed. So when the oscillator is a darker blue, volume is heavier than usual. And then the final piece in here is this climbing grid, which is the go-no-go squeeze. And that highlights periods where the oscillator stays at the zero line, which tells us that there's some reduced volatility and we can expect a breakout. The oscillator, the sort of the powerful piece of the oscillator, which we'll see in some of these charts that we pull up, is that we can use the zero line as objective levels of support and resistance, which is a little unusual for oscillators. Oscillators are very choppy. You're trying to find, we do a lot of work with people that were doing research on using something like RSI in a trend, but it becomes very difficult to identify where those ranges really are. In a strong uptrend, the RSI won't go oversold, but it'll go overbought and then to neutral, overbought and then to neutral, which you'd expect. But where is that level that could perhaps provide support for that range of trading? And so what we've done here is that we use the zero line as an objective way to find those levels of support and resistance. And then when in trend, you will find that the oscillator should hold the zero level. So that's a very quick, hopefully not too confusing overview of how to read it, but always available for questions and trying to keep it as simple as possible.
So and it's great to see the pro version of GoNoGo trend, because right now, currently, I use the free version that's on TradingView, which just basically displays the go and no go, the right where it says go and right where it says no go on your charts. Can you explain what that is?
Yeah, so those are the flags that identify the trend, the beginning of a new trend. The last piece of the puzzle that we put in here was these icons that you can hopefully see on the price chart. So we use the oscillator in a really traditional sense, where we look for areas of overbought and oversold. Like, for example, a good oscillator will find the peaks and the troughs of price action. And so when the oscillator comes off the extremes of oversold here, you'll see these counter trend correction arrows. When in a no-go, they'll be green. In a go, they'll be red. So we can use it in that traditional sense. So here we're seeing that there's going to be, in the short term, a little bit of a rally perhaps against the trend. Same thing and on this bar here as the oscillator comes off oversold levels. But the other icon on here are these circles, and these are trend continuation circles. And this is really the fun part about it, because we know that when a trend is in place, the momentum should not really go overbought if it's a no-go trend. That would be a concern for a no-go trend, but it will go oversold, and then it'll come back into neutral territory, and it should find resistance at the zero line. So when in trend, we get these trend continuation icons, which tell us that we may well experience another leg in the direction of the trend. So you've got the icons on the chart, and then you've got the squeeze grid and the oscillator, which is the added pieces of the pro version.
Well, that's really fascinating, and it's really good to know, especially somebody like myself that's been using the free version that's been integrated into TradingView. So give us some ideas of things that are happening right now, because obviously the market is moving quite aggressively. What are you seeing that has been popping up as flagging like a continuation or maybe even a reversal on any of these bigger assets that's been moving around the markets?
Yeah, I mean, just to stay with the equity chart for a minute, we've been talking about the strong resistance that we saw up around 45.50 on the S&P, and then it rolled over. We see how the oscillator has held the zero line primarily here through this move, and we're getting right now a trend continuation icon to the downside. So in the short term, we would expect price to perhaps move lower again and perhaps attack this low here as the oscillator moves further into negative territory. But we've also been talking about, I think it's, we always try to say as technicians, you can't predict what's going to happen, but you can react to what's going to happen. And we've been talking about the rotation into cyclical sectors and the value versus growth play, and how that's really been, since the beginning of 2022, really been the theme. And what's happening around the world now, terrible as it is, we're seeing that really pushed some of these assets further in the direction that they were going. Even if you just look at something like oil, if I put this on here, we got our last go flag on oil the 3rd of January. And it's been just sort of racing away since then as that rotation into cyclicals has been happening. And then, of course, today, just jumping higher again. And you see here how the oscillator held the zero line.
Yeah.
We got that trend continuation icon, and then prices continued to go in that direction. Same could be said. Gold is, I know gold has been nobody's friend over the last couple of years, been sort of really chopping around, and it's been a struggle for people. The bugs have been looking for it to break out for a while, but it certainly has over the last couple of weeks. You can see the strong run in gold as well. And if you look at that, if you zoom that out to a really long-term picture, then we're sort of testing long-term highs, and people are talking about a really potential strong move to the upside on a lot of the commodities. So those are some of the main themes that we've been looking at. We also put out some setups for stock ideas as well, things like that. But those are some of the main things that are coming across.
So, just real quick question on your chart. So just on gold here. So I see the go that came in right at the beginning of February, the go signal on your daily chart of GLD. But when I see a red arrow pointing down, like you see just right there, if I'm new to GoNoGo Trend Pro, and I see that, would that trigger a response from me like I need to sell here?
So it depends on your time horizon, your risk criteria. We have people that are looking at using, for example, trend continuation icons or go flags as entries, and then the red arrows as exits. Sure, that's a more of a short-term sort of, I don't know if that's long enough to consider it a swing trade kind of time frame, but it's a more of a short-term idea where you'll lock in profits, and hopefully you'll trade more frequently with a higher win rate. But if you are a trend following investor, as that's where sort of our background is, and when you talk to sort of the longer term institutional people that sometimes are looking for sort of multi-year positions, remember that these are called counter trend correction arrows. So what we're saying here is the trend is in place. If the go trend is showing blue or aqua bars, the trend is in place. But in the short term, we may see price move sideways or some sort of short-term consolidation as maybe investors digest gains or whatever it may be. And then we would look to the zero line as for those re-entry icons after price is corrected. And that's when some of your money managers will then be sort of sizing into positions, scaling up positions, because they're being given some confirmation as the oscillator bounces off zero that the momentum is back in the direction of the trend. So sure, you could take these as taking some profits, but also remember that the overarching trend is still in place until you see the colors change there on the chart.
Interesting. Okay. Well, Alex, I think it's a very, very cool system and a cool setup. And I think you've really simplified a lot of technical analysis for probably traders that either A, want to learn technical analysis, or B, just get a little confused with everything they're doing. So let me ask you this. How do I find out more about what you guys do at GoNoGo Trend?
Yeah, we have the website, www.GoNoGoCharts.com. You can send us an email, info@GoNoGoCharts.com. We're available now on several platforms and in the process of adding others: TradingView, Meta stock charts, wealth charts, and coming to more hopefully over the next few months or so. So we're available, and that's how somebody could learn more about it.
Wow, it's pretty exciting stuff, especially as technicians. I know myself, who tends to be pretty traditional, to see an exciting new product hit the market, new trend indicators. It's exciting to me. So, Alex, I want to say I'm excited to have you here. I can't wait till the next time you and I get to sit down and talk about maybe some things that are developing in the market that you're seeing in your indicators that are showing us a reversal. That would be really cool for us to see. So maybe that's what we'll do next time.
Sounds great. Thanks for having me.
All right, Alex, thanks for joining us today. And remember, if you like what Alex does, make sure you click In the description down below, you can get directly to GoNoGo trend charts, and you can get directly to Alex and what he does. Also, give him a thumbs up if you're watching us on YouTube, and subscribe to the channel so you don't miss any of our great content here at Traders Summit. So thank you, Alex. We'll talk to you soon.
Thank you, sir.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.